Tuesday, the 10th day of March 2009, and this is Brian Shannon from Alpha Trends. There it is. That's the rally that everyone's been looking for. We were up 6.1% in the Qs today, and market started on a gap higher and basically didn't look back. Hopefully you had looked at my blog earlier during the day. As I had mentioned a couple days ago, I was thinking about getting my mom involved in the market and just didn't see the reason to do so. But this morning, about a half hour after the market opened, I had said here that the volume is impressive so far. It looks like the start of something bigger, and I told my mom to get involved, and then I had her move her stop up to break even about midday, and then we finished nicely higher with rising 5-day moving averages and that sort of thing. By the way, tonight I'll be doing a live event at 9 p.m. Eastern to 9:30. It's first come, first serve. I've got the link up on my blog to sign up for that, so go ahead. It's free, and we'll be talking about stocks and some ideas that look like maybe we can make some money out of, and a little bit more detail on the markets as well. So here's our first potential level of resistance, right up here at about just under 28, and we used up a lot of energy today in terms of price levels, but the one reason to be a little bit concerned about this is the lack of volume. While we had a very positive volume pattern intraday, let me just change the scaling here a little bit so we can take a look at that. We had a very positive volume pattern intraday, but at the end of the day, we had lighter volume than you would like to see on a move of this magnitude. You'd really like to see much heavier volume than that. But again, the only thing that pays is price. So had you gotten long, that was the right thing to do early on. The market rallied up beyond that 5-day moving average, and again, didn't really look back at all. If we take a look back at that 1-minute time frame, it never got below that daily VWAP. That VWAP never had a negative slope to it. I know a lot of people were attempting to sell short, in particular right in here, and I said basically I'm not going to look to do any shorting with an advancing VWAP. Yesterday I tried to buy with a declining VWAP, and that didn't work. But again, this market has really been best suited for day trades. A lot of people like to fade these gaps, but you have to be aware that not every one of the gaps is going to fade. We opened at this important prior level of support, basically just under it, really, at about 2640. It quickly got above that, held on, pushed through that 5-day moving average, and now with an advancing 5-day moving average and a broken trend line, we have to look for the possibility of continued upside. Now, here's going to be our major level of support that we would look to see as support. First, right around 2680 or so. This high from late last week is going to be important. If that fails to hold, we want to see that 5-day moving average catch on. If the 5-day moving average continues to advance and we pull back towards it, that would be a welcome opportunity to add to longs or get involved. But we've got all these potential levels of resistance not too far ahead. So the market, just as it stair steps lower, you typically see that the market will rally in a surge of enthusiasm, pull back on lighter volume, and then continue higher if it's going to continue higher. There's nothing to suggest that this is anything more than a very short-term bounce. We've got a big level right up above here. We made it through the 10-day moving average, which had been support. We'll now look for maybe the 20-day moving average to come down and meet up near this level. If it can do that and then get back above 28 and hold above 28, then I think we can breathe a little bit longer for maybe a couple weeks. Right now, we have to still look at this as overall guilty till proven innocent, but worthy of a small position in terms of looking at some potential upside. Hopefully you took some profits on some longs today if you were involved, and that you now are holding small positions that can't really hurt you badly. So the key levels again are basically just under that $28 level, up to 28. A close above 28 would be a nice thing. We have to look at the possibility that maybe we're going to do another one of these types of moves where we have a pullback to a rising 5-day moving average, and we create a nice little inverted head and shoulders pattern. Then we could see the height of this pattern, which is basically, what is that, 25 3/4 up to 27 3/4. So maybe we get up to 29.75 or so. If you look at what is 29.75, well, it's approximately this level here. 29.60, actually, if you recall, had been a very big number throughout the year. So maybe that's what we're looking at. Again, you have to anticipate all the potential scenarios. The next, the bearish scenario obviously is that we break down through this 26.70 level and just continue to move lower. If that's the case, I would suggest moving to the sidelines if it gets below that. Let's take a look at next at the financials. The financials were up almost 15% today. Year to date, they're still down an incredible amount, at 30 probably plus percent or so. I'll take a look at that shortly. But we came up to this level here. We are above the 10-day moving average. On the daily time frame, here are what look to be the more important levels. We've got that's a little bit further ahead, but the November high, here we are at this level that had been support. Next bigger level right around that $8.10 area. If we look at the 30-minute time frame, we've got a downtrend line here that still looks like it's intact. So maybe the market slows down at that trend line. I would say draw that in, keep an eye on that tomorrow. That would be nice if it could maybe open up on a gap higher tomorrow, run a little bit, and then begin to pull back maybe. And then you could even look at, I don't want to get too theoretical here, but you could take a look at the Fibonacci and say, well, if it was to pull back 38.2% down of this rally, if this were to continue to move up there, it would maybe move to there, or 50% to here. Then maybe that 5-day moving average comes up and meets it. What we want to do is see what's the relative volume pattern if we get a pullback down towards that 660 level. In other words, here on a 10-minute time frame, we want to see maybe a pull, but a continuation up towards there, pullback on light volume. So we want to see the volume diminish on any such pullback. We want to see that 5-day moving average continue to rally. We've got the shorts have arguably overstayed their welcome for the short term. We're still clearly in a bear market, so you can't get overly excited about this, because anyone who's been excited about any of these giant rallies, and we've seen some giant rallies in the financials and all these sectors and markets, has ended up being hurt badly. And you can almost hear the sigh of relief. Today we did see, unlike the NASDAQ, the financials did see a nice surge in volume, so that's obviously very good to see. So on the what we were looking at yesterday, I said it was the rate of descent of the 5-day moving average was slowing down. That was potentially a slight positive. I say basically getting above this resistance, then maybe you would want to buy with a stop under here. Obviously, with a gap like that, though, it's very difficult to buy. Pre-market, I got long a bunch of the FAS, and then I was looking at it going, what the heck am I doing buying it up here? I sold it for 3 or 4 cents, I don't remember, and then traded it throughout the day. But it was just a very positive session in here, just higher highs and higher lows, nice steady grind higher in the XLF, and now we want to look to see if this rally continues. Where is it likely to meet some supply that will slow it down? That trend line becomes a potential target. Some of these prior levels in here, and that's basically where we have that gap as well. So maybe in this zone from the trend line to slightly higher up towards 7.5. Let's take a look at the Russell 2000. The Russell 2000 did underperform a little bit today. It was still, actually on a percentage basis, it didn't. So I take that back. What I meant to say is it's the only market here that didn't trade or close above that 10-day moving average. So it's still a little bit more deeply oversold in relation to where it is compared to the 10-day moving average. So let's take a look back at the NASDAQ for a moment and clear those lines off. You can see that we're up through that declining 10-day moving average. On the XLF, same thing, that we had gotten, and I'll clear these lines away as well, that we had gotten up through that declining 10-day moving average, but the Russell 2000 relatively underperformed as compared to the 10-day moving average. We saw just about average volume in here today, but Obviously not an average price movement. We've got this market still below the November lows. Yesterday I had posed the question that maybe the November lows become resistance in the S&P 500. Maybe we have that happen here as well. So let's take a look. That's a level to keep an eye on at about $37.20. But what we really want to look at are the for instance the 30-minute time frame. You can draw a trend line off of here. I think what's more relevant maybe is one that takes this high and goes down to there. So we're below that and maybe going to encounter some supply in that area. Also this 3760 or so, we had gotten past this level that had been resistance, and that's also the area where we had the declining 5-day moving average. 5-day moving average, let's click to the 10-minute time frame, is now flattened out. We had seen the market gap up, nice rally on volume, low volume pullback in here, another surge in volume with price action confirming that. But we really traded pretty neutral in here. I've got involved a bunch of times in the TNA and was able only to take nickels and dimes out of it basically. But on the 1-minute time frame, just a very positive pattern. Hold on one second. I'm going to put those pivot lines on because this was a good trade actually, where the market, we saw these volume moves in here, big volume rallies, low volume consolidations, and then a surge in volume. Then it came down and held at that daily R2. A lot of times if R2 holds a support above a VWAP and then takes out a little bit of resistance, this was a nicer trade that I had been involved in during the day. And then again today, later in the day, it did get choppy, but it was good to see that the volume came into this market beyond the last two bars here, basically as prices moved higher. So we've got a market that's been deeply oversold. Today we saw a big rally, 6.5%, but still, obviously, relative to where we are, even 2 weeks ago, we're still down very significantly. So hopefully you're trading this in a disciplined fashion. You've been looking at it basically from a short-term trader standpoint. And important support right now, I think, is going to be basically at about 35.70. That's this level that had been resistance. That's where we have that 5-day moving average as well. So now 35.70 is basically, we break below there, I think we've got big problems. Just from today, though, I think that you want to keep an eye on these two lows. Breaking below those might lead to a little bit further pullback that does lead to the test of the 5-day moving average. S&P 500, let's take a look at the spider. It was up 6%, 5.9% today. It was up $4. And let's take a look at here. Back in November, the lows were right around that 70, just below, I guess it was, let's take a look and see what that number was, because I've forgotten, 74.34. That makes for a pretty obvious target. That's also the lows basically from this day here at the end of February. Right here. So if we look at it from that standpoint, we've still got some room up to that level. I think that if we get a rally up towards there and you're still holding longs, you really ought to, I would suggest strongly that you want to start taking some profits in there. That's probably where we'll see this 20-day moving average come down and meet the market as well. So there would be a couple reasons to think that maybe that area would be a level of resistance. We could also take a look at this high to this low and look at some Fibonacci and see that it's approximately a 61.8% retracement as well. So looking at the 30-minute time frame on the let's take a look at just a straight trend line in here that basically hits here and here. Now we can redraw it and put it off these highs. So we broke both of those angles, you can see in here, so that's nice to see. Breaking a trend line doesn't mean a reversal. I always say this, it means more of a slowdown in the rate of descent. We have the possibility here as well that we maybe would be setting up a right shoulder if this market continues to rally up towards this level and then pulls back. We get that 5-day moving average to advance. So let's put some Fibonacci on that and say, where could that pullback bring it down to? That would be a 38.2% retracement, maybe down towards the 5-day moving average if it begins to rally. You have to be aware of all potential scenarios. We obviously remain in a bear market. That is, that's the primary fact to remember here. Can't get too excited. It's great to trade from the long side and get big profits in a bear market, but there's nothing to suggest the longer term trend has changed. I don't mean to, be too negative here. I just want to point it out that you have to keep it realistic. More to come tonight, so be sure to check my blog. That link will be live, and it's first come, first serve. Last time some people did get turned away.